Hi friends, Simit here from InformedTrades.com. Today is June 9th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I put on the markets, all a part of helping traders learn. If any of the information I'm presenting is unfamiliar to you, you have any questions, you can join us at InformedTrades.com. We have a huge archive of learning material covering a variety of markets, a variety of methods. Check it out, share your knowledge, register as a member, sign up for a practice account, share your trades. We can all learn and grow together. Okay, let's get started with a look at the trades. Excuse me. Okay, right now we're looking at euro dollar. Oh, there. Let me actually load the charts that I was looking at today. These charts I'm using are from TradingView.com. I really find them to be excellent charts, the best charts I've found. And they're free. So that's really exciting. Okay, let's actually start as we normally do with gold. Okay, here we see this bottoming pattern is continuing, and this is just a classic technical example. You know, small candlesticks precede big candlesticks. As soon as you see 1, 2 double doji here at a support level that goes back to here, this could have been a sign to go long. Even though we're in a downtrend, I kind of don't like to go against the trend, but here we see that pattern manifesting itself again. So gold could be headed back up. I'm in it for the long term. I'm interested in buying between 1180 and 1280. I will get a little concerned if we break 1180, but so far that hasn't happened. So far so good. Okay, that's gold. Now let's go to uh, the Australian dollar trades that I have on, and I actually have 3 Australian dollar trades that I have on. First one is Aussie yen. So far, so good on this one. This has been a very easy trade for me. Almost no time spent out of the money. You know, I saw this hammer off support entered here. Price quickly rallied. It closed above resistance here, May 29th. And now I'm just holding on. I'll take take profit. We're getting close to that level. Take a little bit off if we can get to 96.20. Of course, with the yen, I'm still holding out for a much bigger move. I think the yen is in for a really monumental decline. And so I want to be positioned for that. So this trade is already de-risked. I've taken half off, and I'll take half off when we reach resistance. If excuse me, if we reach resistance at this level, and I'll leave the remainder half for hundreds of pips, or I'll evaluate if we can clear that level. But that's some point far away off the chart here. InformedTrades.com/Japan for all the reasons why I'm bearish on the yen. We have a lot of information there. Aussie yen, Aussie dollar also. I'm long Aussie dollar. And so far, so good on this one. This trade has been de-risked. Another trade where really didn't spend any time as a floating loss. Target profit still about 120 pips away. 130 pips actually. So that's that. Just sitting and waiting at this point. Today's candle's up, so that's comforting. Now, pound Aussie, I did think last week there were some, especially on Friday, there were some signs that the Australian dollar might be reversing. So I did put this short order on pound Australian dollar, or excuse me, well, it's in order to go long pound Australian dollar, but if you're going long pound Aussie, you're basically shorting the Australian dollar against the British pound. This trade is not doing too well right now. It is below my entry level, and I'm about 40 pips away. So 40 pips above the red line here, 40 pips above my stop. So the good news is, if you look at the 4-hour chart, there is still some good news, and I still like the technical setup on this trade. So here on a 4-hour chart, we have a double bottom here, and actually this low right here. So we actually haven't even touched this low yet. Hopefully we won't. Hopefully this is part of the pattern of rising lows. That'd be reassuring. We are seeing some stalling here, which suggests that we're bottoming before we reach this low here. That's reassuring. But we'll see on pound Aussie. I'm just going to wait on this one. The target profit is still, what's that, about 300, a little more than 300 pips away. I'm also long pound US dollar. This is another trade that has been de-risked. So of the 4 trades we've discovered, the pound Aussie is at a floating loss, the Aussie yen and Aussie dollar, and now the pound dollar trade has been de-risked. So meaning if the price goes against me and hits my stop, I will not lose any money. My stop is where my break even is. And once you'll see an orange line on my charts, and that's the level where it's usually a resistance or support level, a minor resistance or support level. And once price crosses that, I feel that it's sufficiently in my favor, and I can move my stop to break even right there. Okay, so this looks like it's reversing. We'll see. Nothing. I'm not going to make any changes yet, but we'll see. What I would really like to see is if this resistance level, the break-even line, 67.86, that orange line here, if that can act as support. And the 50 simple moving average is there, so hopefully that can act as support. That's pound US dollar. Now I have dollar Canada trade on as well. This trade has not been de-risked and is still a good ways away from being de-risked. Price needs to fall, close at or below this orange line here, 0847. Right now we're at 0925. So that's 70 pips or so, 75 pips. If price can fall 75 pips, then I'll move my stop, this red line here, to break even. But so far, so good on this. The moving average is here. We're seeing the candlesticks, a pattern. The lows aren't really. You could argue this candle here, June 5th candle, is a bearish checkmate. That high, hasn't been breached. So that's all good. And we have the 50 simple moving average acting as support, as well as the 50% Fibonacci retracement. So far, so good on dollar Canada. It's slightly in the money. The trade has not been de-risked. Now, the new orders that I put on today, let's go to those. That is, let me just get them up here. First one is pound Canada. And I'm shorting this. So we did see some signs of bearishness on the British pound, which won't be too good for my long pound positions. But I did put on a short British pound position here. Canadian dollar, seeing signs of weakness in the British pound, signs of strength on the Canadian dollar. And you can see the trade set up here. Reward risk of 3.81, shorting at 83.90, stop at 84.95, target profit 79.90. I have this trade documented on my blog on informedtrades.com. What we see here, price is at a resistance level, started stalling. Price is below the 50 simple moving average, so the trend is sufficiently bearish. Huge topping formation here, so maybe it looks like the Canadian dollar is finally set to start rallying and get back some of the huge losses that it's accrued over the past year. Pattern of lower highs here, right? We're lower than May 22nd. 50% Fibonacci retracement from this swing high to this swing low. So a lot of signs here. The candlesticks especially my favorite. So I thought it was time to go short. Put my stop 105 pips up. My target profit down at support here. And the stop is basically, where is the trade going to be proven wrong? Definitely if we clear this second Fibonacci retracement 61.8 level, the trade is proven wrong at that point. So that's pound Canada. That order is not filled yet. We're still about, how far away are we on that? I think we're like 50 pips away. Yeah, price is about 55 pips. It needs to rally 55 pips to fill my short pound Canada order. So it might not get filled on that. We'll see. Kiwi yen, price is 20 pips. Needs to rally 20 pips for that to get filled. And basically my entry order on that is actually, this line is incorrect. It's actually right there. Yeah, we're at 87.32. You can see on the right, 87.32. The stop is at 87.92, and my target profit is 84.89. So basically, it's a reward risk of 4.17. I also have the trade posted on my blog on Informed Trades. Reversal candlesticks again at resistance. I'll always love that pattern. If this resistance goes back to January, then established again in March. You can even argue it was confirmed here in May 27th. So reversal candlesticks there. Price is still below the 50 simple moving average. We have a pattern of lower highs. So there are enough signs of a bearish trend, and we rally swung up to resistance. So here's a good time to short, in my opinion. This is a little contradictory to my long Aussie yen trade, but the technicals made sense, and I thought it was appropriate. I am seeing some signs of the yen rallying on some other pairs like pound yen, so I thought there was sufficient evidence for this, as well as Kiwi weakness. That was a more prevalent sign on many other pairs. That's about it for the trades I have on today. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading, and we'll see you tomorrow. Take care.